Hello everybody, welcome back to the channel. I have an amazing video for you guys today. Here's an article from Yahoo Money, and you guys are gonna wanna love this. We have a housing expert saying we're back to normal. Well, I gotta tell you, this expert, you know what, is not looking at the data, not the way I'm looking at it. If we jump in, so I'm gonna kind of go back and forth the article, and I'm gonna go jump into the Redfin weekly housing data to show you why I don't agree. So basically let's read a little bit what she means by back to normal, because I think the housing market is is gonna fall off the cliff. Okay, let's read. Inflation and recession chatter have put the brakes on the once runaway housing market, but there is no crash in sight, according to one expert. Let me just note one, okay? What we're going to do is just go back to normal. That's what she says. Before COVID, you would put your house on the market and it would stay there for 2 or 3 months, and then you get a couple of offers, and we're back to normal. And normal means things are going to be a little slower. Demand has changed now, and builders that could not build fast enough in February have an onslaught of inventory now, and they're doing specials trying to get you to come back and buy. People are tired. They've been looking for houses for a long time and are not going to buy out of the lease when prices and the economy is doing what it's doing now. I kind of agree. It's definitely becoming a buyer's market. And yeah, by seeing new construction houses, basically putting better offers, upgrades and whatnot, it's kind of like they need to get rid of these houses, right? At the end of the day, you can't have houses sitting on a lot like this. So here, let me continue reading. At the beginning of the year, mortgage rates were about 3.55, and now they're probably going, I want to say they're going to be above 6%. So most likely doubled, almost double in just a few months, which is unheard of. We said last year that the rates were going to double, and yeah, they're definitely going that direction. People are tighter with money, and it really comes down to your family's finance. What's happening for you and your family, not the economy. Some families are doing really well. They got 2 employed people with secure jobs. Other families are still struggling. It all comes down to personal finances. Yes, I agree that, thanks, but again, when you're talking about going back to normal, right? She said, oh, everything's going back to normal and there's not going to be a crash. Well, okay, let's erase 2020 and 2021. Let's just talk about normal, for example. 2019 is what she's referring to, and we're in 2022. You're going to tell me that in 2 years, houses going up from 278 all the way up to 385. You think that's normal? No, that's not normal. Houses, what's going to happen is she's sitting there saying, oh, it's going to normal. Well, houses are going to sit for 2-3 months before they get bought. Houses might sit for 6 to 12 months before they get bought. That's the reality. And what's going to happen is this price is going to be closer to this blue line, 2019. If not, it might even go lower than 2019, depending how hard the economy crashes, which I would expect that after going through coronavirus and everything that happened, I would expect that that the housing market would be below the 2019. Remember, coronavirus shut down the country for 6 months, or maybe more in some industries, and definitely more in certain states. We're going to be paying for coronavirus for 10 years. Now, what the feds are doing right now are basically, they're seeing that things are spiraling out of control. That's why they're raising the rates. Again, today GDP came out that it was down 0.9%. That's a big deal. That means that people are making less money. The country is making less money, and the country's still spending a lot of money. Remember, we have a big government, man. We spend so much money, it's crazy, and we're not making the tax revenue. So we are in deep trouble here. And if you are fortunate enough to have two incomes, if you're married and you have 2 solid, safe jobs that pay pretty good, yeah, in the next 2 to 3 years, you're going to be the king, because you're going to be able to buy your dream house for at an unbelievable price. But it is going to hurt, guys. It is going to hurt. It's going to be tough. So my suggestion is work really, really hard. Keep your job, right? Make sure that, you save as much as possible. Guys, if you've never bought a house, okay, you do not want to put less than 20% down. Okay, I'm telling you, like, you do not want to be putting PMI. Now, I know that sometimes saving up 20% seems impossible. I get it. And that's why, hopefully you can borrow some money, or your family, your parents, whatever, they can help you out somewhere. But basically, you really want to be above 20%. That's going to make it a lot easier to own a home, because you don't have to pay that PMI insurance, which is basically paying for air. And it does get pricey. Another thing is, basically saving, making sure that you do good at your job, and hopefully everything, is stable for you in that respect. And then you could save enough money to really, put down a good down payment on your dream house. That's the key. Remember, buying a house, you're buying wealth, right? You're buying generational wealth. You could pass it down to your family. It's such a good investment, in my opinion. And it's an emotional investment, right? Like, it's where you live. It's an amazing thing. Like, you use it. I mean, it's where you sleep, right? You use it every day. You make it better. It's really one of the best things that you could put your money on, and it grows over time. So to me, real estate is the best way to really set your future up right, and your family's future too. Now, with that said, guys, I want to hear your comments. What do you think? You think we're going to have a big crash, or do you agree with this article that we're back to normal? Because, definitely not back to normal with the high prices that we currently have. So I kind of disagree a little bit with this person. But anyways, please, I want to hear from you. Go ahead and comment below. Now, by the way, if you guys do like these videos, don't forget to smash that subscribe button and go ahead and like and leave a comment. Remember, I'm not a financial advisor. I do these videos for entertainment and for fun. Thank you guys so much for watching. I love you guys, and I'll see you on the next video.